So let's talk about that Figma IPO. Is this a stock that can potentially make you a lot of money, or is this a stock that can lose your money? Before we dive in, if you're new to investing or want to get better at investing, rest assured you're in the right place. Here at Tykr, we help people buy and sell stocks with confidence. In this video, I'm going to touch on 6 things. I'll try to keep each one short and sweet. Number 1 is, how does Figma make money? Number 2, the latest news on Figma, especially around this IPO. Number 3, we're going to look at a comparison to 3 other popular stocks and what happened with their IPO. That'll give good context on what's happening here with Figma. Number 4, we're going to take a look at the financials. Number 5, we'll talk about how to handle IPO stocks. And number 6, I'll let you know if this is a stock I plan to buy, hold, or sell. All right, number 1, how does Figma make money? So we actually use Figma at Tykr. It's a great tool for designing websites, software, different products, but they really make money in 3 main ways. Number 1 is subscription tiers. As a consumer, you can subscribe to it. And if you're a business, you can purchase a certain amount of licenses. Let's say you get a creative department of 10 people, 15, 20 people, you can get a license for each person. So Figma is going to make a lot of money in their SaaS offering. They also have FigJam, which is an online collaborative tool. And then they also have fees associated with plugins. You can buy different plugins and you're going to pay a little more money that way. So a pretty simple business model, all based around design. Again, really solid product. And I really like the product. They do great work. All right, let's talk about the news around the IPO. So this was labeled as a blockbuster IPO. The target IPO price was $33, actually started at $85 and increased over 250% over the next day. That is unheard of. That was crazy amount of money that made people in a short amount of time. However, the share price pretty much fell off a cliff ever since. We're going to find out why that's happening. In other words, the share price went up to like 140, 145, somewhere in there. As of the recording of this video, August 5th, it's back down to about $87. All right, there have been a lot of popular investors and institutions getting involved in this stock, including Cathie Wood's ARK Invest. Just because you have popular investors or firms getting involved doesn't mean you should as well. Doesn't mean they know something we don't. Sometimes there's a lot of hype and they will jump on that train as well. Again, we're going to take a look at what's really happening here in a few minutes. And then next up, a few investors have seen some of the financials, which are now being released because it's moved from a private company to public, and they're starting to see the truth, which is starting to come back as this stock may be very much overvalued. Again, we're going to find out the truth here in a second. And then this is really good news. People are talking about Figma reigniting the IPO market. So over the last few years, we've been kind of in this IPO stagnant phase. There's, of course, businesses going public all the time, but there's been a lot of popular businesses that were aiming to go public, but haven't yet. Some of those include Stripe, Plaid, and Impossible Foods, kind of like sitting on the sidelines waiting. Well, the door may have been kicked open completely because of this big IPO. So thank you, Figma. We all kind of needed this. I think the financial market needed a little shaking up to be like, all right, get off the bench, get in the game. If you want to go public, let's go. So again, Figma, leadership at Figma, investors at Figma, thank you. All right, number 3 on the list is, let's look at a few other stocks. You're going to recognize all 3 and take a closer look at their IPO behavior. All right, so looking at the first one here, this is SoFi. They went public. If I hover over my screen here in Tykr, it looks like somewhere in November 2020, share price at about $9.50, somewhere in there. And it quickly spiked up to about $26 and then fell off back down to 16 and then really fell off. Look at this, went down to like $5 somewhere in there. So not a fun roller coaster to be on. People jump in, there's FOMO, share price goes way up, and then it falls off. We're going to talk about why that is in a second. Next stock on the list, let's take a look at Uber. So this one, they went public at about, looks like 35, 36, somewhere in there. This was in May of 2019, and then it went up to about 40, then up to about 47, and then it fell off to about 31, and then check this out, went down to about, looks like about $17, somewhere in there. It's almost cut in half. So again, not fun to be on that roller coaster. Then let's take a look at a stock that's just growing like crazy right now, Palantir. All right, so they went public in 2020 at about, I remember this is like about $9.50, somewhere in there. Share price, look at this, went up to about 40, somewhere around $40. Then it fell off slowly back down to 20. And then if you check this out, going over here, back down to about $7 or $8 somewhere in there, just not a fun roller coaster. So what's the deal here? So a lot of stocks that are going public, they're not going public for you. They're going public for themselves. What that means is there are a lot of companies that go public almost every day that you and I have never heard of. And the reason is they're looking for more money. To give you context there, they can run out of ways to raise money or get loans from a bank. They can be turned down from private equity. They can be turned down from venture capital. So what do you do to inject more money into the business? Well, you can go public. Now, institutions are going to be smarter than most retail investors. So they're going to kind of be wary of what's going on. But a lot of retail investors will have FOMO and they will dive in thinking that, hey, this is the opportunity to get in early and make a whole bunch of money. Well, that's rarely the case. Unfortunately, that's how a lot of these businesses that go public, how they're raising money. So this is how IPO stocks typically play out. They go public. We don't see all the financials quite yet. And then when that first earnings report comes out, that reveals the truth. It shows the previous quarter or two, sometimes more, but then it shows the current and they can quickly see, okay, so you were here and now you're here with your revenue or your profits. And that's when the sell-off starts happening. So that's why the behavior, as we looked at with those three stocks, it's typically IPO, share price goes up, earnings report reveals the truth, and share price falls off a cliff. This happens like 90% of the time. So on that note, let's go ahead. We're going to take a look at this stock now. Figma's not in Tykr quite yet. We need a few quarters to really create a rigorous score. And typically that can take the next earnings report. If it's not the first one, it's the second one. And then all the data really pulls in nicely. And we have those nice scores, that summary, the score, the margin of safety, and even the ability to do the 4M. That's that AI-powered tool. So it's not quite yet in Tykr, which is okay. We're going to go ahead and take a look at Yahoo Finance and see what's going on. So free platform, Yahoo Finance, and go to the financials tab and then go ahead and click on income statement. And as you can see here, we have 2 years on the annually, and we have 2 quarters. So at Tykr, we ideally like 3 and 3. So in this case, we really have 2. It's not quite as much as we'd want. But let's keep this on annual and take a closer look at some of the key lines. So on the income statement, we're going to take a look at the revenue and then the EPS. We can also take a look at net income, but EPS and net income are very similar. The difference is EPS is simply net income divided by outstanding shares. So we're just going to look at revenue and EPS. So check this out. Revenue here we can see is 504. All numbers are in thousands, so that's actually 504 million. Then it jumps up to 749. So that's a really good sign. Figma investors, that's what we want to see, that revenue increasing, and even the trailing 12 month, that TTM is at 820. Here's what's happening and why the share price was quickly falling off a cliff. Go to the EPS, look at this, 60 cents. Then it went to negative $3. That, I can tell you right now, is probably the reason why the share prices went from like 140, 145 all the way down to 87. People are seeing this. That does not create confidence, especially for institutions. They are selling off because of that. And look at this, trailing 12 month, negative $4, almost negative $5. That's, again, great product, but they're not a profitable company. We want to invest in businesses that are profitable, that EPS is profitable, and the EPS is increasing quarter over quarter. So income statement could use a bit of work. Let's go to the next financial statement, which is the cash flow statement. One line we want to look at here, which is free cash flow. Check this out. About 1 billion in 23, and they, oh gosh, look at that. They fell down to negative 69 million in 24. But positive sign here, back up to 45 million over the last 12 months, moving in the right direction, but not even close to that million. So just keep that in mind. And then the balance sheet. I took a look at the balance sheet before I recorded the video. Not too bad. Let's have a closer look. 4 lines here. We want to look at assets and equity. We want to see those lines increasing. And then liabilities and debts we want to see decreasing. So assets, look at this, 1.6 billion up to 1.7. That's looking good. Equity, 1 billion up to 1.3, also looking good. Liabilities, we go from 558 down to 469. So moving in the right direction there. That's good. Biggest liability is payroll. And then next up, we've got total debt. They go from 14 million up to 28. So looks like they're taking on more bank loans to probably help with the hiring more people, I imagine, or maybe investing in other products. Who knows? But anyway, their debts are increasing. Like I said, balance sheet, not too bad. All right, so overall, the financials, not terrible, but it's the EPS. That is, again, probably the main reason why the share price is falling off a cliff and something for all of us to keep an eye on. So this leads up to how to handle IPO stocks, the fifth point in this video, which is thank you to Phil Town, who really taught me this, which is you want to wait about a year. In other words, 4 consecutive quarters where you're watching those financials. Now, fortunately, Tykr really simplifies things for us, and we want to see those on sale stocks. This stock, Figma, when it hits Tykr, it's probably not going to be on sale. I imagine it could be watch or overpriced, kind of leaning towards overpriced. But in other words, we want to see stocks go public and then wait 4 quarters, and we want to see that EPS increasing quarter over quarter, and we want to see them beating their earnings estimates quarter over quarter. So we got a few things we want to pay attention to. Fortunately, Tykr can do that for us. So this leads up to what am I doing? Again, I like the company. It's a great product. Will I invest in it now? Absolutely not. As soon as it hits Tykr, I'm going to go ahead and add it to my watch list, and I'll be interested, not outright interested, but I may show some interest when it moves from, let's say, watch or overpriced to on sale. That green stock is what I want to see, and then that's going to give me more confidence. And that's probably a inflection point when a lot of other institutions, they're going to say, hey, financials are looking a lot better. Now let's go ahead and watch the share price take off from there. All right, I hope this video was helpful. If you want to buy and sell stocks on your own with confidence and even see my portfolio, you can join Tykr for free. And of course, don't buy and sell stocks based solely on what you hear. Only buy and sell stocks that align with your own personal financial goals. Thanks for checking out this video. We'll see you in the next one. Bye for now.